Hey guys, Dave Keller here with Market Misbehavior. When I interview people, I love to ask them what their one chart is. And that means if you had one chart, besides just a regular chart of the S&P 500, to get a good read on the overall market environment, where things were headed, what would it be and why? So today I'm going to share with you my one chart, which is the TLT, the Long Bond ETF. Now, essentially with the TLT, we've had this situation of a nice run up over the summer months. And then September through December of last year, you had this sort of descending triangle pattern, a pattern of lower highs combined with a pretty stable support level. And what that means is you've established a consolidation phase. You've had a nice run up, sort of digesting those gains. Every time as time goes on, you sort of have lower and lower highs, but you have a stable support level. Buyers are coming in, supporting the price at a certain point, and on the TLT, it's in the 134 to 136 range, very consistently for about a 4-month period. What's happened year to date has been a complete change, right? So instead of being this consolidation period, we've now broken back above the 50-day moving average. The TLT has now broken above trendline resistance. It's now broken out of that descending triangle pattern, which is now resolved to the upside. So overall, showing more demand than supply, suggesting further upside as the TLT moves higher. It's interesting to see where the TLT has been relative to resistance levels. And most recently, it broke above its swing high from the beginning of January. So it topped out just below 140, pulled back and tested support, but now broke above that. So now you have a pattern of higher highs and higher lows, which is by definition a new uptrend. Now we're testing its previous resistance, which is around 140, 150 or so. This came from the beginning of December. And if it's able to eclipse that resistance level, I think it suggests much further upside. And if the TLT gets back up to these levels from last August, September, October, that would coincide with about a 1.5, 1.5%-ish yield on the 10-year, which is obviously much lower. It's back toward the lows from the beginning of last fall, but would be a very different environment that we've seen from interest rates over the last couple of months here. You combine that chart of the TLT with the dramatic sell-off in commodities, and I think you see a real rotation in asset allocation into bonds, into more defensive areas of the market. Could suggest maybe potential weakness leading up here for stocks. In terms of what I think about the TLT, besides those key levels, I would also be looking at the RSI. As you can see, the RSI has been pretty range bound between 35 to 40 and between 65 and 60 on the upside. If we're able to get above that RSI 60 level, remain above there, it suggests enough demand to maybe keep that momentum positive, keep pushing prices higher, yields lower. And you'll note that on the most recent pullbacks, as the TLT has tested support, the RSI has never really gotten meaningful below 40, which is characteristic of more of a bullish environment. So again, if the RSI is able to rotate, remain in that bullish phase, I think it confirms the breakout that we've seen in price. So my chart of the day, my one chart, is the TLT, the Long Bond ETF. If this sort of thinking about investment behavior, about routines, and about discipline is of interest to you, I hope you'll hit subscribe, hit the little bell to get notifications of my new videos, and please check out the other videos on my Market Misbehavior channel. Thanks so much.